Hello. So yeah, I guess we are live right now. Hello, Pradeep sir, can you hear me?
Yes, I can hear you.
Yeah.
Awesome.
So, hey Gaurav sir and Riddhi ma'am, welcome to this AMA session by Cool Audits. And the main agenda of this session is regarding crypto taxation. So, firstly, I would request you both to give a quick short intro regarding you. So, first, let's start with Gaurav sir.
Good evening, everyone. This is Gaurav Mehta, founder at Catax, which is a crypto taxation solution. I've been active into crypto ecosystem since last 9 years, have some formal education from University of Nicosia in this domain, and primarily have been practicing forensic and auditing for the law enforcement agency since last 4 years. So I have worked with the ED, SFIO, NCB. I have handled more than $10 billion worth of crypto scams, wherein my responsibility was primarily to investigate cases, liaison with international exchanges, build evidence to be present in the court of law. Then I moved to training IRS at NADT. Since last 2 years, I've been visiting faculty at NADT, National Academy of Direct Taxes, wherein I trained incoming batch of 73rd and 74th batch of IRS in crypto taxation, auditing, and investigation. That said, recently I ventured out into the private space in order to build an automated solution for crypto taxes. So hopefully that would be sufficient for you guys to convince that, okay, I might be a subject matter expert.
Yeah, absolutely. So yeah, Riddhi ma'am. Ma'am, you are on mute, I guess.
Yeah, I guess you are on mute. Yeah.
Am I audible? Yeah. So my name is Riddhi Jain and I'm company secretary and a chartered accountant. I have done diploma in cyber laws from Government Law College, Mumbai also. I pursued like 7 degrees, then I shifted to blockchain. It's a very rare breed, somebody from chartered accountancy industry shifting to blockchain. So I started my journey like 7 years back. And then initially it was just that somebody paid me in cryptos for my services. That's how I started in this industry. Eventually, I worked with a few of the projects that were based on Solana and then Polkadot. I worked with one of the developers of the crypto industry. Eventually, we tried creating few coins and for few projects. And then I fought Global, the hackathon. Then I helped few of the coin making industry, coin making or coin developing these engineers. Eventually, I was supposed to deal with the taxation part. Team like Catax, I cannot exactly name them here, but there were some teams wherein I had to deploy US taxation, UK taxation, and Indian taxation for that particular agency. I started working with them. Eventually, I shifted completely to this particular stream of blockchains. I gave my seminar in Dubai. At the same time, I gave it in Indonesia too. So I had few exposures here and there, and that is how I've been here in the industry. Yeah.
Yeah, awesome. So we have two very great experts regarding crypto to deliver several insights regarding it. So my first, as we all know that there is a 30% tax on cryptocurrencies if we have profit, if we are on profit. So I would like to, would you guys like to shed some light upon the process, like how does this process works of 30% tax?
Right. So initially it came up with 30% taxation. It's not only 30% taxation, it's 30% taxation plus surcharge plus 4% cess. So anytime that you make profit in crypto, it's like directly a very heavy amount of tax rate that is implied on us. At the same time, be it selling, be it trading, or be it spending for goods or services, you need to pay taxes at 30%. So the consequences that we face as traders or as investors or hodlers, once we sell our cryptos, that is the time we attract taxation. That is why it's called as income tax. So anytime that we sell our cryptos, the taxation is alarming here, and that's 30%, which is the highest slab rate in India. By far, we used to pay 30% earlier also, but it wasn't for the whole soul individual or business person. It was for a few limited sector of people that paid 30% taxation. So with this Finance Act 2022, yeah, there was a lot of hashtags in Twitter that reduce crypto taxation. So this started this way.
Yeah.
To further build on what Riddhi had said, the government has came up with a very beautiful definition on the taxes. Now, people are very much confused. How do I define transfer or what is sales or anything else as a matter of fact? So they have made it really simple for anyone. If any crypto is coming to your wallet, that is defined as a purchase of crypto, whether you have acquired, you have not acquired, whether that is airdrop, whatever be the scenario. If any crypto comes to your wallet, that is a transaction, no matter what is the nature of transaction. That's step one. Second step, you as a person, you have liability or the onus is upon you to prove the cost of acquisition of that crypto. If you're not able to prove the cost of acquisition, then technically your auditor or the government can price it as a 0 rupee as an acquisition cost until unless you prove it. That's the second part of it. The third part of it, whenever you are transferring that crypto from your wallet to someone else's wallet, it does not matter what purpose you are sending, it is deemed as sales, because government here understood that they do not have a capacity to identify or at least infrastructure at a place wherein they would be able to validate whether that is a sales transaction, transfer transaction, NFT minting transaction, or as a matter of fact, anything else. Therefore, they have simplified the sales definition in the act itself, wherein whenever you do the transfer, those are deemed as sales. Now, assuming you acquired your cryptocurrency at X price, and now you're transferring it at a Y price, and based on the market price, you would be able to identify whether you are in a profit or loss, and then calculation of 30% taxes, surcharge, cess, etc. comes into the place. That's one part. Second part, whenever you're doing transfer, there is a lot of illicit activities going around in the crypto space. When the government, they look from their point of view, they see all your banking transactions are visible. There's a proper mapping of the transactions that you are doing. But in crypto space, there is no answerabilities, there's no framework. So second thing that they bought in is they deploy 1%, they mandated 1% TDS on every transaction that you do. So that ensures that you by default have to disclose the party that you are engaging with, assuming you are engaging off the exchanges. If you are engaging on the exchanges, then the exchanges have responsibility to do file TDS and all those things. So you need not worry about it. That's the second part of it. The third part of it is no set of loss. I mean, it does not require any further explanation, I believe.
On this one, Gaurav,
like,
do you think the taxation laws that have come into India right now for the consumers over here, is it actually inspired by any country, or did we come upon our own? What was the basis of arriving at astronomical number like 30% or probably more than that?
So I'll let first Riddhi take that question from the industry's point of view. Then I think I'm more equipped to speak or at least defend that argument from the government's point of view, because I have spent a lot of time with the folks and have some idea about their thinking process.
Okay, so what they realized is this is a very lucrative industry. So per se, they taxed it with 30%. When you say 30%, it's like the highest slab rate in India. So earlier also, when we see taxation on gambling, horse riding and stuff, so all those things are taxed at highest slab of 30%. So what happens is this industry is basically looked at a different way. So that is one of the reasons why 30% is imposed by far the way we see, because in gambling also, there is no set off of losses. There's no carry forward of losses. In the similar fashion, it's done here too. So something is copied here and there. Like, I would not say it's copied from other nation. It's copied from the similar nation with different aspect of different things. The way it's processed. So it's copied from gambling and horse riding area, and that is covered in iOS. And this crypto is also covered in iOS. iOS and chart accountancy terminology, it's called income from other sources. And that is how we are taxing crypto income. So now it goes on like we're not copying any other nation. It's a prototype from our nation itself.
Interesting. Thank you.
So, I mean, that's the relevant thought that is circulated in the market, crypto equal to gambling. I don't know who are the folks that have circulated this propaganda out there in the market, but when we look from the government point of view, at least I am trying to fit myself into the government point of view and speak what is the rationale behind their thinking process. We have 20% taxes, 30% taxes already in the equities market for the long term and short term. So 30% number should not be surprising to anyone. That is the max available, part one. So I agree. Now, when we look at the taxes is an indirect indication from the government which industry they want to support and which industry they do not want to support. For example, in agriculture, we have negligible taxes, almost no taxes. On the other hand, gambling, they have 30% taxes because it just diverts attention from the market and engages the human skill or human intellect into something that is temporary. I don't want to go depth into it. Now, when we look at the crypto, the government has been very bullish about the opportunities or the capabilities of the blockchain. But cryptocurrency being unregulated across the world pose a lot of threat to the nation, especially their financial stability and their ability to implement the monetary policy. We in the terms of recent fiasco, FTX fiasco, we have seen what happens when the market is let loose to do whatever they want to do on their own. So government understanding the mindset of an Indian people or the psyche of Indian people, right? We are too much into TikTok. We are too much into the fantasy gaming. We might be too much into the cryptocurrency that at large would divert nation from, I would say, making some tangible or hardcore engineering progress. So they understood that, okay, this industry is something that we would like to keep hold on for some period of time. Therefore, 30% is maximum available from us. Let's do check on that. That's first rationale. Second rationale, India is not at all a tax-paying country. Among 1.3 billion people, a handful of people are paying taxes on the conventional economy. Imagine on the non-conventional or the blockchain or the complex wallet economy, which nobody understands or nobody cares about. So how many people are going to pay taxes? Maybe not. So I'll give you some insight. Not more than 30,000 people have filed crypto taxes, especially assessment and all those things. So none of the people are interested in paying taxes because they know the competency of the Indian government. They know how complex the crypto is. They know nobody's going to come for them. Okay, so that is another rationale. Okay, if X amount of people are going to pay, how do we calculate the taxes on all those things? So probably that was the second reason, 30%. The third reason is people say that it's akin to gambling or not. I still believe it's akin to gambling because gambling is all about probability. There's certain probability either to go down or everything else. So is in the case of crypto. Because if I ask people what is Shiba Inu, what is Dogecoin, they'll say go to the moon or to the mine. There is no discussion about the potential implication, the utility aspect of it and everything else. So here in the government, being the government stepped into the market and took some strong decision, which I, as an investor, I did not like it, but those have proven to be great with the time. Today, FTX or Terra Luna or anything else, not much impact has been done to the Indian customers. So that's at least my point of view.
Interesting. Thank you so much. Yes, you're on mute.
Hello. Yeah, sorry. So yeah, it was like a great insight. So as you guys told that the tax is on the income which the one person earns from cryptocurrency. So how is this overall income calculated? Like what aspects does this involves, if anything else?
Okay, how do you calculate your crypto income? Is that the question?
Yeah, absolutely.
So you know this will require a lot of recording process when it comes to somebody making income from crypto, because I know investors from 2007 onwards. So what happens is they don't, and if they are hodlers, they don't know the purchase price even. I see a lot of close-knit people who are like clients to us who are not aware of, we bought it and that exchange is not there. We shifted to a hard wallet and now they are selling it. So the point is you'll have to have cost of acquisition. Your cost of acquisition is your purchase cost. That will be the fair market of value of that particular asset, whichever it is, be it BTC, Ethereum, or any other coin that you have taken. Purchase cost, that is fair market value at the date when you bought it. And then you'll have to sell it. Suppose, for instance, I bought like BTC worth 1 lakh and today it's valued like 1,20,000. So the difference is 20,000. So I made a profit of 20,000 here. I'll pay 30% tax directly. So the major thing is here, no deduction is allowed. One, no deduction will be allowed. In other income, there are deductions that are allowed. Here, no deduction is allowed. Again, charges paid to the exchange, these things are also not allowed. deductions of all the sections that are in ATCs like LIC and all the deductions that we normally take for the 5 heads of income is not available here. No losses can be set off and carried forward. In other cases, in case you sell your cryptocurrencies, that's what we are doing. You attract 1% crypto tax, 1% TDS. And this 1% TDS, that means you'll have to have a TAN. Your TAN number should be present. And in that case, you'll have to pay TDS that is monthly, and you'll have to file returns that are quarterly. So what happens is you'll have to maintain a set of records in INR, what is your buying price. At the same time, you'll have to maintain a record of your selling price. And to match these particular things, if you are a trader, I have seen like a block of transactions and like a good amount of pen drives giving the transactions from WazirX, CoinDCX, and Binance. All those transactions which actually land up for the litigation cases. So in order to order match them, and that is a very hassle kind of work. It's not an easy task to match the orders. So anybody who does this transaction has to keep a record. You cannot tomorrow claim that the exchange is wiped off, like FTX is no more. So you have to maintain that record. That is one of my requests from my side as a chartered accountant, that please maintain your records. Please get it printed, because exchanges keep it for 3 months, 6 months. They have a time duration and time frame. Every exchange, be it KuCoin or other exchanges, they have some duration for which they maintain the transaction. So compile everything and then you have to calculate. It's a very easy calculation, but then order matching is a hard. Yeah, that's all.
I agree with Riddhi. I mean, we are dealing with the customers day in, day out. It's a nightmare for them. Some people have account on WazirX, Binance, Coinbase, etc. In order to take advantage of arbitrage opportunity, they are sending crypto from one exchange to another exchange, to international exchanges, then converting into other coins. So first of all, the problem is there is no bookkeeping standard defined. And second thing is every exchanges have their own what we call method of doing transactions or bookkeeping. So I, as an individual, for me, there are a number of problems. First, how do I build up my book, common book, I mean, which reflects all the exchanges or the transactions across MetaMask, hardware wallets. So I, as an individual, that is the first problem for me. Second thing is there is a price difference between crypto across the continents. So in India, there is a certain price difference for crypto, even that changes from exchanges to exchanges. So it's pretty difficult for individual. Which price do I need to map? Do I need to take an average on all those things? I mean, if you go into the nuances of bookkeeping, auditing, and taxation, it's a nightmare. I think that's what inspired us to at least create a simplified solution for people to do taxes. So how, I mean, if you ask me, Gaurav, how to do taxes, I say come to Catax, create account, upload your transaction statement, we'll do the reconciliation, we'll do the pricing, we'll do the auditing on the blockchain, and we'll provide with the ready reports. Even if you have multiple accounts, we take care of that. So there are two parts of it. One is how to do and how actually it is done. Both are totally different.
Yeah, absolutely. And like the taxation part we are talking currently is about cryptocurrencies. So are there any other taxations on NFTs as well? And what will be the scenario in case?
So in the definition that is currently given for virtual digital assets, so that definition actually covers VDAs. And this particular VDA, it has specifically defined NFT as a VDA. So NFT is a VDA, so similar taxation will be done. There is nothing like, there will be no new taxation for NFTs. NFTs will be taxed in a similar fashion and similar manner once they are sold. So there's nothing new specifically going for like NFT is also a part of VD, and it's specifically defined, and government is very much well off aware that what all things can come in the parallel. So they have given a very smart definition, time and on, whatever they define will be VDA. So this is basically given in section 247A of the Income Tax Act. They have added a new section defining this VDAs, which covers virtual digital assets, non-fungible tokens, or any other token of similar nature by whatever name called. So they have tried to cover a good amount of things. At the same time, they have covered any other digital asset as central government may, by notification in the official gazette, may specify, which means central government may per se say that this is a virtual digital asset. So they have tried to cover a good amount of things that way. So NFT is also a virtual digital asset. It will be similarly taxed.
Right. On that point, I just wanted to understand from the alternative asset classes that are coming up in the crypto spaces, right? So there is ETFs, there is bonds, crypto bonds that are coming up, although not immediately, but a lot of companies are thinking about alternative forms of that is depending on crypto. So does this these kind of investment investment instruments attract similar kind of taxation, or will it have a different scenario altogether in the future?
The way it is defined, the way virtual digital assets are defined under Section 247A, it is specifically defined what all things are covered. Any information, any kind of code, number, tokens, being Indian, not being Indian or foreign currency will be covered in virtual digital assets. So be it variety of class, no matter, like you subdivide into multiple parts that this is a kind of NFT, this is a prototype of a particular thing. They'll try to cover every single thing. So no matter how smart you tend to act, they have been very smart in writing the definition of virtual digital asset. So anything that I have said by far will be covered in the definition of virtual digital asset, because they have kept some brownie points with them, adding on like whatever central government may specify in the official gazette. So yeah.
Right. Great.
So Pradeep, to answer your question specifically, my thoughts is that, right, bond market is highly regulated. I mean, whether you talk about primary or secondary market, it's highly regulated. It's driven at a certain places out there. Now, assuming if the government, sovereign governments decide to implement their bond or issue their bonds based on the blockchain, I'm not talking about the corporate bonds. Those are highly regulated somewhere or other places. Anybody can do it, depending upon which country you're talking about. But when you talk from the point of view India, I don't think that the bonds would be allowed on the blockchain market, and therefore none of the law would be applied later on stage. Assuming if the US or Canada or UK, any other country decides to implement their bond on the blockchain, then in India, obviously those bonds cannot be traded or won't be able to trade it. So I think the existing law wouldn't impact the bond market as such, because that's just a speculation, and I don't think it would be formalized, at least in upcoming few years. So that's my point of view. I mean, but yeah, like right, Riddhi said that the government has kept a definition in such a vague way that they would be able to bring anything, whether it be assetization of your property or assetization of even your loans, security, whatever be the scenario you talk about. Those can be vaguely defined into two segments. I mean, not vaguely, precisely defined into two segments. One is NFTs that are backed by something, assets, real life assets, physical assets, and other thing, NFT that is backed by nothing.
Understood.
Yeah. So like currently we have been talking a lot about virtual digital assets. So how are the losses in virtual digital assets treated as? Like loss of a cryptocurrencies and like FTX fiasco currently. So how is this overall treated as currently by government point of view or by common man?
So see, irrespective of how common man thinks, how government thinks, let me tell you how government thinks. Your loss is your loss, but in case you make profit, we want a share of it. So this is how this industry is working. Like if we see post 2022, the budget, if we see post the budget, I think it's been very, very clear. You have to bear your losses. You cannot set off your losses. You cannot carry forward your losses, which is the most stringent form of policy that is laid by far. Otherwise, in other markets, there are 5 heads. You have intra-head adjustments. You have inter-head adjustments. Now, when I say a 5 heads, you have house property, you have salary, you have business income, you have other income, you have capital gain, and in normal parlance, we are able to set off the losses and we are able to carry forward the losses for the next few years. In case I made a loss in FTX in the current year, I'll be able to carry forward to next few years until I make a profit. If it was a normal industry. Now coming to the crypto industry, in case somebody who is Indian who made a loss in crypto industry in FTX, the current thing that went on in the market, I think you've lost it. That means you're not going to carry forward any of your losses, which is like a very heavy thing to digest or take it as a person, that your losses are your losses. Anytime that you make profit, government is going to come. They're going to take away some profit. They're going to take away as taxes some part of your profit. So this is something that that is weird at the same time. This is how the losses are treated. This is how it will be looked at. So there is no set off and carry forward of losses. So this gives a very negative impression. Per se, if I see as a layman, it gave me a negative impression. As a CA, I know why it's done. There are regulations that might be turning up in the near future. So there is no intra-head adjustment, there's no intra-head adjustment. And somewhere, it's done to bring the fear amongst the community that is trading like intraday, who are trading like every single hour they are trading. So that is how it came up. This is my point of view towards the same. Yeah.
So I would love to add on the existing conversation. I would like to just extend the argument. Now, just a hypothetical question. I was just asking to myself, if I have to sell my blood or kidney and then buy cryptos, which crypto I'm going to buy? So I could not think of any more than two cryptos. One is Bitcoin and is Ethereum. Everything else has proven to be noise, or maybe not, we'll see in the future. The reality is there are more than 30,000 crypto as of today. Now, industry cry, there is no set of laws, there's no set of laws, you are cheating, your profit is my profit and all those things. But you look from the other point of view, today I make 1 crore profit in Bitcoin. I'm an OG, maybe I have a lot of money, right? Now, I deploy a smart contract and create something called Gaurav coin. I price it as $10,000 per coin. Tomorrow, I say that I purchase 10,000 dog coins, Gaurav coin, whatever coin, and the prices fall. I'll say, government, I'm not going to pay you any taxes. I have made 1 crore here. I have made 1 crore loss in crypto taxes. Bye to you. Point being, there are n number of cryptocurrency, and the innovation allows anyone to exploit the law, create their cryptocurrency, unnecessarily settle the loss. Therefore, the government has been very explicit that there is no set of laws going to be allowed on that part, on the formal part, in order to avoid the exploitation. Second thing is, government wanted to give a very subtle hint that, guys, please understand, the crypto is innovation. I agree. But that does not mean the dog coin is innovation, Shiba is innovation, or tomorrow maybe cat coin comes or maybe cockroach coin comes. You cannot go and speak or train every individual or educate them that cockroach coin is of no use, no matter Elon Bhaiya or Steve Bhaiya sells it. But you cannot teach the people on the ground. They are not that literate. They are bounded by, I mean, they are fascinated by their greed. They are fascinated by the future and everything else. So the government at that point of time uses whatever is available in their kitty with the ultimate goal of protecting the customers. I can build the rationale for 1% TDS, but I don't think this is more about defending the government. It's more about understanding what is the tax scenario and how to deal with that. So
I think to add to this particular conversation here, it's not about meme coins coming up or any amount of coin, but there is a lot of technology behind things. Per se, how we see the blockchain industry, how we see the cryptocurrency market. I mean, these are two different things in the same hand somehow. So you cannot directly defend it as just because of meme coins, this law is okay. Somewhere, even if you are a hodler, sometimes when you sell it, maybe 10 years, 20 years down the line, when you sell it, it pains if you are somebody with 10%, 20% tax slab, and suddenly you have to pay like 30% taxation on your sale of crypto. It pinches that why. And maybe you're holding a subtle coin. Maybe you're holding something because it has good amount of technology, good amount of innovation going on. So there has to be some kind of mixed thoughts on why this is done and how this is done. It's like extreme blunder is also happening at the same time. Okay, it's a subtle decision to be there. The way you said, it's a subtle decision because meme coins are there. Anybody can come up with coins. Anybody can book losses. But there could have been penalty proceedings or some other way to grab up things in the crypto market to regulate the same. Because even the exchanges that we call exchanges are not regulated. I mean, who came up with the name of exchange? We have BSE, NSE when we trade in the normal market of share market. We have BSE and NSE, and these are exchanges, and there are so many other exchanges across the world which are actually named as exchanges. They have something beneath them. Now there are exchanges like FTX. There are so many other exchanges. FTX specifically highlighted these days because of SBF and everything that went out. But there is no regulation, and this I think because of the non-regulation, maybe the taxes are pretty high. Once this get regulated, maybe they are going to be a bit flexible. I have no idea because I'm not behind the scenes like you. Maybe.
So I also agree with that because this is the first draft of the law. They will see how many people have filed taxes. Assuming if nobody's filed taxes, then obviously they will force to review. But this is what we call a temporary resort in order to protect the Indian economy from whatever the mayhem is happening. Government is trying to help understand whatever. So I think this is temporary, and as we move forward, the law will mature. The government would revisit. They will come up with a lot of other clarifications on maybe reviewing of tax lab or TDS or anything else. So this is not the end, I would call it. Maybe this is a humble start, or call it a taxation law on the training wheels at this point of time. So the things would change in upcoming futures, I believe.
Yeah, at least a start. Still not legal, still not illegal, but at least a start.
Yeah.
Yeah, absolutely. And like, how does these laws on cryptocurrency, how does these laws regarding crypto taxation affect individuals and businesses? Because I know that as an individual, it hurts a lot. So like, what regarding the business part, like Web3 startups and all, how does it affect them? The laws on crypto taxation.
Sure. I would like to add few points. On an individual level, the law affects as the same way like it affects for your income. No, later you will get caught and you will go through a lot of penalty and other things. The only difference is probably the government won't be able to identify your cash stash or anything else because it does not have a trail. But in the blockchain, they would be able to analyze the transactions for millions of customers on the infrastructure level because everything is auditable on the blockchain. So on the shorter term, maybe we think that the crypto taxation won't affect us or we should not pay, it is fine and everything else. But down 1 or 2 years the line, this is going to be something very mandatory because everything is there on the blockchain and you cannot evade the taxes, crypto taxes primarily, whether it be from exchanges or anywhere else. So that's first thought. Second thought, from the Web3 companies, it's a little bit of chaotic. Now, chaotic, I mean, when you look at the Web3 innovation, it's fundamentally about the blockchain, the decentralized economy. Now, that is anyway democratic for anyone to innovate, build, or there is no restrictions. Thousands of companies from India have done the innovation on the blockchain and they have become $1 billion company. There's a Firechain, there's a Polygon, there is a lot of companies coming there. Only trick or problem happens when you are issuing the tokens. So when you're issuing the tokens, then obviously you come under the crypto or VDA or existing acts. So obviously this is something difficult for the Web3 startups that are trying to innovate through business model innovation of blockchain wherein the tokens are there. But they have also found out a way. Maybe they are creating a Malta entity or Singapore entity and managing those. But apart from that, the blockchain innovation is not going to stop in India and it will continue irrespective of what the crypto laws are there out.
Yeah,
I
awesome.
think he has just to add on, the way he ended, like this industry is not going to stop, beat whatever. He's very right when he says people are that passionate about creating coins, tokens, and innovations. This industry is not going to stop this way.
This industry does not care about government. The government should care about this industry. And they should spend awfully lot of time to understand what is actually happening on the ground, the nuances of it in order to achieve their goals. So the more ignorant they are, the more repercussions they're going to face on the shorter and the longer term. As we see it in India, because of the, I would say, lack of understanding of the government, we have already lost 5 to 7 years. So I don't think that it's acceptable anymore. So.
Pradeep, sir, any doubts from your side? Like any questions regarding this?
No, so just wanted to sort of take another angle to it. It was also something that was in my mind. What happens if I receive Bitcoin as or probably Ethereum as a gift? What happens if I gift somebody? Will the tax be levied on me or the receiver of the Bitcoin? So how does that work?
So, there is a particular section that covers the gifting laws. And this gifting laws are covered by basically section 56 to 10, which says that any person who receives benefit whose value exceeds 50,000. Now it includes this, any person is basically including resident or non-resident. In case you receive it as a gift, you'll have to pay taxes. Now, it is not covered under the section, under the definition of transfer. So you'll have to pay under slab rates. Now, gifting is a big section which says if you are relative, now relative is defined. Your brother is a relative, your father is a relative, it has a list of relatives. Suppose you're gifting it to your relative, it's okay. You don't have to pay taxes if you're gifting it to your relative. But if the value exceeds 50,000, it's coming from a friend or anybody else, it will be taxed per se, like the fair market value will be taxed. Whatever is the fair market value of that particular gift, the day you received it, in case you encash it, you're going to be taxed. Suppose, for instance, you hold it and then it increases. Like you've got a Bitcoin of like 1 lakh rupees, then you are selling it for 1,50,000, then that 50,000 will be taxed at 30%. However, your 1 lakh, that particular amount is basically taxed into your slab rate. So that is, gifting has like two-way, there is a two-way direction. When I think of gifting, once I'm receiving it, what is my cost? Am I selling it on the spot or am I holding it for longer duration of time? So somebody who is a transferer has no worries. Somebody who's receiving it is worried about the taxation part. So that is how gifting is taxed. It has a limit of 50,000. At the same time, government has tried to cover gifting because this created a lot of chaos in the market because everybody tried to give. Now, actually the gift is taxed in the section 56 because gifting is something where a lot of tax evasion is done. That is why there are regulations with different gifts that is done. So for cryptos or say virtual digital assets, the limit is 50,000.
And also, is there a concession or an exemption for people who are maybe senior citizens who are who want to trade and stuff like that?
As such, no, they have not given a thought on senior citizens first.
Only Gen Zs are bullish about crypto and the blockchain.
Yeah,
Old
yeah,
folks do not
absolutely.
care about Bitcoin and crypto. I was
I
just
was
joking.
going to say the
I
same
think
thing.
there are seminars where when there are live seminars, per se as a speaker, we think that there is going to be a limited audience and we can tag and trace them like, okay, like somebody from the age of 15, 20 till I think 45, 50 is the maximum age that we expect to see in some event of cryptos. There are people who are senior citizens who definitely attend. I would not say per se that they don't. But yes, that is how we see the market. Youngsters are too much into this particular industry. The amount in the percentage is quite high, and the government is also looking in the similar fashion and manner. They haven't provided anything for senior citizens trading in crypto. No.
Yeah, so I came from the point of view that if there is any documented exemption or concession that is given, maybe the youngsters will start trading the name of their seniors, senior people in the family, right? So these things happen. So
they have already done it. They have already done a lot of things before 2022, like looping it to multiple accounts of senior citizens, of the family members, and all the cases that we take up. So there are a lot of things that they have already done without thinking of the same. But no, government hasn't thought of any particular thing that way, and I don't think they would that easily because they are aware. If not them, they'll use it in their senior citizens account. If they are taxed this way, they'll do it the other way.
right.
Yeah, as we know that Gen Zs are mostly involved in cryptocurrencies. So I guess that's why the government doesn't take crypto seriously.
That's not
so
the
it was
reason.
just a joke. Yeah, it was just a joke. Humor, nothing serious. So yes, we have like came to an end of this conversation. So just would like to ask, request to both of you to give a end note or kind of a message to the builders who are passionate about crypto. Like most of them got demotivated because of FTX downfall, and most of them said that I am out, I've liquidated my cryptocurrencies. Like anything would you like to tell them so that they should be motivated to build more stuff in blockchain and support crypto?
Okay, so it started from Evergrande, then Dogecoins, Luna, then FTX, also Voyager, one more Voyager, and there were other Voyager and one more from C. I don't remember the name exactly. Yeah.
Three arrows.
So
There are a lot of failure stories.
there are a lot of failures. There are a lot of currencies that are going to come. There are a lot of currencies that are going to go in every bear market. It's only the updated things that are going to be here, and they are going to be consistent. So anytime for the investor's point of view, for somebody who's a trader, I would say, look at the background of things. I know a lot of people who just jump in this market because somebody has suggested them something. And Doge and Shiba Inu is something that as Indians, we know a lot of people hold them just because somebody made them jump into these particular coins. So as an investor trader, I would say, just go behind the scenes, learn the white paper, how things work in the industry, and then go for the investment. As somebody who is a developer, somebody who is an engineer who wants to jump in the field, I think this is the most lucrative industry. If you have some kind of thought, innovation, something from the real physical market that you can drive into the market of blockchain, and you can develop, there is some re-engineering that can be done, and shifting from that bandwidth to this, and bringing on a transparency to this particular field, then yes, as a developer, as a builder, but you have to be consistent. Then there is something called tokenization, token economics, writing white papers. There are n number of things in the market when you come and see the market. So as a trader, you just look at graphs and other things, but behind these things, there are much more rational behind the industry of blockchain. So when you see that, and when you see industry from that particular point of view, for being in the long run from in this particular industry, leave the pricing aside and see the lucrative part that way, that how the industry is developing, how the solutions are coming up, how a blood report and how the whole soul reports of an individual can be saved, how a nation can completely go inside the blockchain with one biometric and solving very little things to hi-fi things of life, if I say as a normal person, how things can be sorted and solved, and how the wholesale banking industry would one day completely go in the blockchain. If you look with that particular vision, I think you'll be in the market and you'll never leave the market. Even as an engineer or as a trader, if you know how to look at the market and the real strategy behind the market, value and pricing and just trading is one aspect, but there is a lot more thing ahead of it and behind it that is going on. So looking at that, I would just say, and there are a lot of FUDs that are in market. There are a lot of scams that are in market. Please be aware of them. I know a lot of people who have lost money because they just engage into some or the other people who are into scams. Be aware of that particular scams. Don't jump. Your money is also precious. Somebody else's money is also precious. So a lot of things are happening in the market, and be it exchanges coming down, or be it currencies coming down or going wiped off from the market, I think you have to be in the know-how of the market. With the social media, you have to be updated. This industry will keep you on toes 24/7, 365 with all the tweets. This is how I have seen the market. That's all from my side. Yes, Gaurav.
Because this call is about taxation, so I think I would like to focus a few points on the crypto taxation primarily. A, DeFis are not a way to evade taxes. Those are very much trackable. B, no matter you have a Ledger wallet or MetaMask wallet, it's only a matter of time that they get to you, because there are a lot of logics that would help you to segregate whether that is a MetaMask, on-chain wallet, or hosted wallet, or custody wallet. Part 2. Part 3, embrace yourself for a lot of notices, because government has a lot of raids on the exchanges and they're processing data on the industrial scale. That also includes your family members, or maybe your account or your friend's account, or everything else. So I would say that crypto is not a blip in the human history. It's just starting. It has only started. I mean, it has taken maybe a few baby steps. So right now is the right time to build your crypto books, because you will be reaping benefits on the future terms. So whenever the future becomes more formalized, more regulated, at that point of time, you will see all the benefits of it. So my recommendation would be, do not shy away from disclosing your crypto holdings, build up your books, pay your taxes, and get ready for being the largest stakeholder of this revolution. So rather than looking into evasion, not paying taxes, 30% not right, set of loss not allowed, I'm not going to give to the government, I hate you, all those things, just trust your government and take a positive step, contribute from your behalf, and let the discussion continue.
This is got to be one of the most exciting webinars that we have ever had, for the last 3
absolutely.
to 4 months now. So thank you so much, Gaurav. Thank you so much, Riddhi. It's been pleasure talking to you. Just a short note from our end. You might already know that we are into smart contract auditing. We also sort of align with whatever you guys are doing from the point of view of alerting Web3 projects of and evading them from such a lot of vulnerabilities. So I think it was super relevant for us to talk to you and have more insights on the crypto taxations as well. So I think from that perspective, it was such an eye-opening session. I have to give to you guys. Thank you so much for your time.
Thank you for having us.
Thank you so much. Yeah. Okay, thank you so much. Yeah.